let's also get in the management of CSB Bank, since we're focusing on the gold financiers, and they have a fair bit of their portfolio as well that's inclined to this part of it. Mr. Mondal, the MD and CEO of the bank, joins us on the show. Hi, Mr. Mondal, good morning, and always good to have you on the show, sir. The RBI has asked lenders, they've raised some queries out there. Could you tell us, what is your analysis of it and what is the feedback you have got?
Good morning, Nigel, and good morning to your viewers. Yes, I think there was a communication from RBI on gold loan business and broad directions. And we have been working it for the last 2 years because one good thing about the supervisory process which we have now, where it's a constant supervision, is we have that opportunity to communicate with RBI and their views constantly. And as you rightly said, that we have a larger gold loan portfolio as a proportion. There has been conversations happening, which has helped us in doing a lot of the things which is being communicated through this circular. So to that extent, as a bank, we are broadly ready with most of the points. Maybe one or two we have to still work on that, and we have to communicate that compliance to RBI. But we are quite comfortable with the implementation of the circular as it has been advised.
Pralay, morning, Prashant here. We just had Pranav from Bernstein, who tracks this space as well. And I was asking him whether this actually is directed towards some of the newer players. When I say newer, I don't mean, I mean recent entrants into the space over the last couple of years. Because as Pranav was saying, that some of this reads like lending rules 101, right? So this is kind of reiterating how you're supposed to go about doing this. And Pranav was saying that maybe for older lenders, and you are an old lender in this space, in the gold finance space, especially in the state of Kerala, Manappuram, Muthoot, etc. as well. So for some of the existing incumbent older players, this actually may be a little bit of a positive, just because it may be a little negative for others. I don't know how you look at it. Quick thoughts.
Yeah, good morning, Prashant. I have always taken the view that anything which is for the industry, and there is no negative, positive, everybody has to be on the same page. And hence, good long-term players will always find a way to do the business in a compliant manner. So to that extent, I don't look at it as an opportunity or as a threat. I look at it that we have to do the right things. And if you ask me what Pranav just said also, that gold loan is a very touch and feel business, and customers themselves are very comfortable when they walk into a branch and do business. And as lenders, we are also very comfortable because it's just not knowing the customer, knowing the collateral, which is the gold, and understanding that there's a lot of experience and a lot of touch and feel there. So to that extent, I think the kind of a traditional method, going through branches, doing it through the branches, having experienced people doing that business do help. And that is definitely an advantage to us for sure.
Mr. Mondal, hi, good morning, sir. You just said that you are in conversation with RBI, and then you're ensuring all the regulations and the compliances are up to the mark, and there could be one or two areas where you're pulling things up. Could you elaborate a little bit on that? What specifically, for a bank like CSB, what would be the concern where RBI would want you to pay greater attention? Because the advisory that came in was very wide. Right from end use of those loans, which, I mean, that end use is not being monitored, to the way auctions are happening. Just trying to understand what the Reserve Bank's concern would be from the older, more established players like CSB.
So in a touch and feel business like this, where value of the loan is small and hence the number of customers and number of transactions are very high, and where the tenor of the loans are also not very long. So to that extent, there has to be a lot of proper documentation processes, like policies are all in place for us right now. But what I think RBI wants everybody to do, I think we are a little ahead of the curve in terms of what we have already done. Thankfully, we are ready for most of it. But what we need to do more is checking on the ground that what policies and what we have rolled out is happening in 100% cases or not. And to be fair, it is very difficult to have 100% compliance on everything on the ground when you're dependent on individual people, whoever is doing it. And hence the audit processes has to be a lot more stronger. We have implemented that over the last 1 or 2 years, but we will significantly enhance that part. So I think that's the part where we need to do more audits. Let's say if you're doing one audit or two audit branches, we may need to enhance that a little bit. I think those are the areas where we want to do on the documentation and the process part.
Got it. So you need to make sure that the regulation is being followed in letter and spirit, and therefore more scrutiny and audit at the bank level or the NBFC level, as the case might be. Will this mean that there's a bit of a slowdown? I mean, the business is almost 45% of your total business, right? What was the growth that you had in mind for the gold loan portfolio? And as you go about ramping up some of these compliances and the audits, will the growth come down in the near term?
So, Survi, let me put it this way. The growth has not happened really because of any of these issues. The growth has happened because if you look at the price of gold has gone up by anywhere between 25 to 30% in the last 1 year. And hence, if you look at the gold view, people are saying it can touch $30 to $100 also in the long run. I'm not taking a punt on that, but I'm just saying what I'm reading. So to that extent, I think that's the reason why gold business has gone up, and hence tonnage has not gone up that much. It is mostly value, and we are very conscious of that. Given all these perspectives, I think we'll continue to do well as long as our processes and compliance is good. And let me put it this way. We saw it in microfinance also many years back. Once better governance, better compliance comes, in the long run, actually business grows and business doesn't decelerate. Only the players who are following it to the letter and spirit actually takes advantage of that. So to that extent, we are very focused on what we want to do. And I don't see this as a dampener for the business. Of course, if gold prices starts coming down someday, obviously there will be a dampener. But right now, this is not a dampener. If at all, this will be an accelerator in the long run for good and compliant institutions, whether it is NBFCs or banks.
All right, Mr. Mondal, so tell us, what are you factoring in? I recall Q1 was disappointing because of strategic reasons and regulatory reasons as well, but Q2, you're bounced back. Now, give and take everything with the current price of gold, what are you factoring in for your overall book as well as for gold for this fiscal? Earlier, I think you were alluding to around 18 to around 20% growth in your book. Now, what is the revised estimate, particularly with gold? As you said, tonnage hasn't gone up, but pricing has gone up.
Yes, Nigel, you're right. So, yes, Q1, we had some tactical, strategic, whatever reasons for a softer quarter. I think we have bounced back. We have continuously focused on the deposit. If you look at our deposit growth is around 25%. We have also got enough borrowings to ensure that our other liability parameters like LCR and SFR and all of that is in control. Our CD ratio is also looking good. Overall, only deposit growth is almost 35%. So I think we have focused a lot on the deposit because we thought there is a risk emerging there from a liquidity perspective. So we have invested into that and growing there. On the asset side, as I said before, that irrespective of what the market does, we will grow 30 to 50% faster than the system. We have done that. Hopefully we have done that because we know our numbers. We have to see the industry numbers. We are around 20% growth on assets, and gold has grown by around 27%. So I think gold is still sort of nose ahead of our overall portfolio growth. But I think our wholesale business will start picking up in the second half of the year, and so will SME. And retail is also growing. So to that extent, I'm pretty confident that we'll grow anything between 30 to 50% of the system faster than the system. And that kind of a projection still I hold.
Okay, and we'll quiz you more on the numbers, margin, outlook, etc. when you join us post your Q2 numbers. But Mr. Mondal, one final question before we let you go. You have admitted in the past, that you all were interested in inorganic growth. One of those assets that we have quizzed you about is Bank of Maharashtra. Is there some more inorganic growth that you're looking at as of now?
As I said before, it's not in my, I think it's a conversation is not with CSB. So I can't comment on that, but not that anything which we know of, which says that we are looking at a large inorganic growth at this point of time. If one of our investors looks at anything, I will not be able to comment on that. But at this point of time, CSB is purely focused on organic growth. Maybe some portfolio here, portfolio there, we'll always look at depending on the pricing and the valuation. But a larger acquisition, we are not looking at as a bank. So that's the way we are looking at it.
But what if the promoter is looking at another asset? Then it's possible that they'll want to bring both these two assets together?
You have to ask them. I am not privy to that, and they have not.
We'll do that. We'll do that in the next month or so.
We'll ask Fairfax. And thank you very much, Pralay. I appreciate you joining in, and good speaking with you here on CNBC TV18.